Pender multi-strategy income fund is a great product that's going to be a complement for investors that are looking for income, but also dampening the volatility. The multi-strategy income fund is a fund that combines our best-in-class corporate bond fund, absolute return fund, and an R plus fund in a one-ticket solution that's going to be actively managed within bands to provide a nice steady stream of income with less volatility than the underlying strategies, and hopefully less underlying volatility than the overall market. What differentiates funds from other funds is the tactical nature. What we've got is two funds that have a negative correlation with the corporate bond fund and the absolute return fund, but it's not going to be a static asset mix. We will have a band with we can move these funds depending on our macro view from the Pender view of whether we're bullish, we'll be a little more on the corporate bond side. If we're more cautious on the markets and more hesitant, we'll be more focused on the absolute return fund, which is going to do better in more negative markets. So we really can complement this with our macro overview, combining within ranges tilting between those two funds, and that will have a nice risk-adjusted return that we can be stepping to the sidelines, focusing on absolute return when markets get a little shaky. But when things are looking clear and we've got a good risk reward, we can focus on corporate bond to get more of the upside. And really, this is a nice trade-off because the corporate bond fund and the absolute return fund have some attributes of negative correlation. So when you combine two funds that have a negative correlation, you get a smoother path. So there's two different ways that the funds are going to manage risk. First off, these are actively managed funds at the core of the process. So from the corporate bond fund, Jeff Castle and his team will be actively managing risk from within that bucket. Justin Jacobson will be managing risk within his bucket from the absolute return fund. And then we complement those together. So it's kind of a top-down, bottom-up risk-adjusted return is what we're looking at to try and dampen that volatility and provide a nice steady stream of income.